Don't be afraid to call into your local office. Those people are there to
It's been 2
assist
decades or more since we went to market value and use, and a lot of people are still trying to figure
Three
that out.
things that a taxpayer should do: check your deduction eligibility, check the property record card accuracy, and do both of those things every single year.
They're for the taking, but most people aren't willing to go out there and research for themselves, which is one reason why this podcast exists.
Hey everybody, Ty here, All Things Assessed, with the inaugural episode of the podcast, the show. We're going to be posting it to YouTube. You're always going to have a video version of it. Some episodes might have some things that get thrown up document-wise. If I do that, I will describe it and also link in the show notes what that might be. There probably isn't going to be any that we discuss on this episode. However, I will possibly provide some links in the comments to some of the things that we're going to discuss. But first and foremost, I want to introduce the show, let you know kind of why All Things Assessed came to be, what the goal of the show is, and then I'll introduce myself and we'll get into it. The show is going to be centered around All Things Assessed. I know, shocker. But that isn't necessarily, while my forte and my primary knowledge base is going to be on property assessments in Indiana, very familiar with the Elkhart County assessment area because, yes, each assessor might have different means in the ways in which they go about equitably and fairly assessing to market value and use. And I understand some of that terminology. You may not be there yet. We're going to get there. The whole purpose of this show is the biggest and most glaring issue that I think there is, and the disconnect between property owners, taxpayers like you and me, and our tax bills or our local officials or our legislators is we just don't understand the whole system. Now, I don't understand all the taxation things. Taxes are not something that the assessor does. However, I'm familiar enough, and I'm hoping to have on some people who are much more well-versed in perhaps tax levies and circuit breaker and stuff like that. But the purpose of this show is to be a resource for you because that's the number one hurdle. I mean, I have worked on both the private and the public sector when it comes to things revolving around property assessments primarily. And every single week, I run into someone who, if you can get past perhaps their frustration, perhaps some of the things that they're saying to you, some of the attacks, you're their outlet. If you can get past that, it's basically almost always just a lack of understanding, and they don't know where to go. Sometimes people don't even know what questions to ask, and that's a problem. I think I have watched, and I have been on the other side of the thing, not being in the assessor's office in areas where I maybe have a client, or I'm going in looking in the old days to try to sell a company that I used to work with. We always tried to help the appeals process be more fair and equitable and more market value based. I would go in and there are some assessing offices where it's very clear they're not trained to be a servant to the community. And that can formulate a distrust right off the bat. And I want this episode or this show actually to be a resource for all taxpayers. Now, yes, perhaps your assessor in your jurisdiction does things a little bit different. This show is in no way connected to the office that I work for. I currently am an employee of an assessing office. However, we're going to be talking about assessment terms, assessment guidelines, assessment laws, things that transcend what jurisdiction you're in. And there are steps that you can take if you feel you're being disserviced, and we'll go through those. It's going to take a lot of episodes to cover everything that has to do with it, and I doubt I even cover everything, but we're going to hit the main things and the things that you need to be paying attention to. As a property owner, you should be able to look to your assessor as a resource, but if you can't, I want this to be a supplement. I want this to be a podcast that provides you with guidance and equips you with the knowledge of what you're looking for, what you need to ask, and potentially help you lower your tax burden through perhaps mistakes or an assessment that's not representing market value, or perhaps there's exemptions and deductions that you're not aware of right now that an episode of this show will help you at least know who to ask the questions to see if you qualify. That's a broad view of what the goal of the show is. So that's an introduction to the show. Allow me to introduce myself. My name's Ty Miller. I opened up with that. I am a resident. I live in Elkhart County. My family and I have been Elkhart County residents now for about 5 years. I grew up in Elkhart County. I grew up in Middlebury, Indiana. I was a Northridge Raider and went to Indiana University South Bend for a bachelor's of education. In the process of doing that, I was working part-time at the local county assessor's office and started getting relied upon for a lot of different things there. And it just kind of turned into a career path, I guess you could say. Back when I graduated for teaching, there wasn't the shortage that there was. And by the time that teachers were in high demand, I also was kind of picky with where I wanted to go. But I went into assessing, and I've worked on both the public and the private side. I haven't always been a county employee. I've been also a private employee, contracted to various counties or contracted to private clients to help them in their appeal of their assessments or understanding of their assessments. I do hold a level 3 certification, Indiana Assessor Appraiser. You can look up if you're really interested to see what all that entails and all the classes that takes. You can do that. I have all my pre-licensing courses completed through McKissick to become a general appraiser. I did decline to continue that and start doing field work and everything. Again, that's irrelevant to this podcast. I can share it if you're really interested sometime, but I have 10 plus years of assessment litigation, specifically handling of both local and state level appeals and assisting in those. So I try to stay as well versed in Indiana assessment laws as possible. There's a lot of them, but I try to, and I currently serve as the first deputy for my local assessor's office. I am not an elected assessor, nor is this podcast in any way to be construed as a delivery of information from that office. I just want you to know my credentials going into it. This isn't just some Joe Schmo espousing things. I'm never going to go about this podcast in a way that hopefully comes across as a way to defend property taxes, because that's not my role. There are things I would change for sure. I want this to just strictly be a resource for this is what's currently in place in Indiana, and you as a property owner, you need to be aware. That's my goal of these things. That's what I want to lay out, and hopefully that is what I deliver. I don't want to ramble on and on about myself or the show. Let's get into the goal of the show. So every single episode, I'm going to have a goal of the episode, and it's going to hopefully drive that episode, that podcast, so that way you can go to it. As you could see from the title of this episode, episode 1 is 3 things you can do to help lower your tax burden. And I'll probably call it property tax burden, just because that's going to catch people's eyes. It's going to cause you to listen. Yes, apologies. It's a little bit of that, but it is actual. We're going to talk about the 3 main things. So first and foremost, every single year, your assessor in your jurisdiction has to notify you of your assessment. Typically speaking, I know there's at least one county, Marion County in Indiana, but most counties will send you your notice of assessment within the recommended time frame, I'll just say. The state says basically you need to notify your taxpayers by May 1st of every year of the upcoming new assessment. Now, it is February, it's the end of February 2025 right now. So all assessors across the state of Indiana currently, they're working on locking in their 2025 assessments. We are an effective date in Indiana of assessments of 1/1 of that given year. We used to be March 1st. It's been a long time since then. I don't have that date offhand. If you want that and you're curious of that, post a comment and I'll get back to you. I know it's been a long time, but we are a January 1st assessment date of that year. So right now, once the assessor gets their ratio studies in, which we'll talk about in a later episode, the adjustment that's applied to assessments every single year, or a lot of their other property type studies, amendments, permit work, data work, all that is in for 2025. The state certifies the numbers after going through it, reviewing it. You then will get a copy of what's called a Form 11 in the mail. Your Form 11 is the notice of assessment. You're going to get one this spring for your 1/1 of 25 assessment. And what that is the assessment. It's not what your tax bill is going to show this year, because we always pay. In Indiana, state legislators had the proactive mindset of taxpayers need to know what their assessment is, preferably before they ever have to pay taxes on it. That way, if it seems erroneous to them, they have time to research or make a mistake. Counties have the ability to correct errors, handle appeals as much as they possibly can, get amendments in before any tax estimations are done, budget estimations are done. You're always going to be playing catch up a little bit, because unfortunately tax appeal litigation can sometimes take a really long time to do it well, I should say, and we'll get into that as well in future episodes. But that Form 11 is going to notify you of your assessment. You should always, whenever you get your notice of assessment, allow it to be a reminder to you to reach out to your local assessor's office and ask for a copy of that year's property record card. Now, every single property has what's known as a property record card. Most of them use a CAMA system across the state of Indiana called Xsoft. There are a few other CAMA systems out there, so your card may look slightly different. If you own multiple properties in different jurisdictions, your assessment, your property record cards may look just slightly different, but a lot of the same components are going to be displayed on it. It's going to be the most data and information dense document that you can get from the assessor's office. It's going to itemize a lot of the things, not all the things, but the majority of the things in your assessment that they're assessing you for. Some of the things that are displayed on the card impact the assessment as far as a value. Some things don't. A good example of that is we're more of a square foot based system. So the number you're going to see on most cards, if you have a home, if it's a residential home property, you're going to see a bedroom line item. You could change that to say 99. It's not going to make an actual difference on your assessment. The only way that it might is if that assessor has found in studies a way to delineate out their neighborhoods based on bedroom type, which I have not heard of, but it is possible. But it's very important to have that information correct, especially if you ever enter into an appeal process. If the appeals department is competent and has been trained well, the bedroom number could be a factor in their review. It's a major factor if it's a rental type property, and we'll get into perhaps some episodes on that as well. But ask for a copy of your property record card. The way this might help lower your tax burden is the simple fact that you may discover an error on it. You can start that conversation. Go over your property record card with somebody that is familiar with the card. Most assessing offices are very open to going over the card with you. They shouldn't be trying to hide anything. They should be able to explain it. Now, I will say there are a lot of different employees in assessing offices. Some of them don't handle real estate. They handle sales disclosures, and that's their primary focus, or they handle personal property, and that's their primary focus. Perhaps they're more or less the accountant of the office. So depending on who you get, don't be offended if that person can't quite help you to the depth of which you need, but they should be able to direct you to who you need to talk to. A lot of area brokers, realtors, appraisers, if you happen to have a friend like that, they're typically pretty well versed in reading the cards, at least at a degree that they should be able to spot any large mistakes. A good example of a mistake, say you bought a property, it had an 8x10 shed, and it just wasn't in good condition. Yes, sheds in Indiana are assessed, but you tear it down. And you didn't get a permit for it. You didn't know you had to. You basically just knocked it all down. It was all wood. You burned it. You threw the shingles away, type of a thing. And you didn't tell anybody. Well, the assessor, especially if you didn't pull a permit and they didn't come visit the property at a time frame in which it was gone and noticed, they have no way of knowing. So that's a way that you could possibly lower your tax burden. Another good example that we see a lot is basement finish. Perhaps maybe the house that you have, it had basement finish for a long time, a big flood came through, and you had to rip it all out, and you just didn't have the money to replace it right now. You need to let us know. That's a great example of your data just being a little bit off, a little bit wrong. Or it could be a measurement mistake. Oftentimes where you have a garage that's kind of halfway sunken into the side of a house, we don't always get that depth measurement correct, because we may have to rely on blueprints. We may have to estimate from the outside if we didn't get in during the building process. So there's a lot of different things that just reviewing your property record card is going to be worth your time and energy. It's not going to take long. The longest time to go over your property record card is going to be that very first time, because you're going to have to generally familiarize yourself with the card, understand what it's trying to convey and all those things. But then each year, as you look over it more and more, begin to get more familiar with it, it's going to be a very quick and easy process. Most assessors' offices, you can just come in, ask for a copy of your card. A lot of jurisdictions have a link on their website. If you happen to live in Elkhart County, go to elkhartcountyassessor.com. There's one there. I know a lot of the other jurisdictions have one as well. So do that. That's number one. Just basic familiarity and ownership. This is what I'm being taxed for. I want to make sure I'm at least not being taxed for the wrong information. Now, small caveat without going too deep into the weeds, there are some things on your card that are subjective in nature. You may believe that your property's in worse condition than they're stating. That's something that would be a subjective item. That's going to be in a different appeal. So if you spot a mistake on your property, whether it be a subjective opinion-based item or it's non-subjective, you're going to want to file an appeal with the assessor's office. And that's why I always say do this around the Form 11 time, because if your Form 11 comes out prior to May 1st, right now, Indiana assessment laws are this. If you happen to listen to this podcast, later than 2025, you may have to double check, because maybe laws have changed. Laws change all the time. If the assessor's office does not notify you by May 1st, your tax bill serves as your notice. But the majority of you listening to this, your deadline to appeal that Form 11 value is going to be June 15th. Subjective errors have to be filed at that time. Non-subjective errors are going to be a little bit different. That's Section 3 on an appeal form. It's like the back side of the appeal form. Subjective is Section 2 on the front side of the Form 130 or the appeal form. But get a copy of your property record card. It's going to be one of the best ways to ensure that you're at least not being taxed inappropriately. I understand many of you are listening. There shouldn't even be property taxes. Fully understand. Agree with you to a larger point than I think a lot of people would think I would. But property taxes do exist. So if you are going to own property in Indiana, you understand that and know that going into it. Let's ensure that you're at least not paying taxes on something that is incorrect. You also need to review the assessment. What is that value on the Form 11? If you get your Form 11 and it has a value on there that that just seems higher than I could get on the market for this property, maybe look into it a little bit more. AVMs, or automated valuation models, that a lot of, I'll say, real estate sites use, are getting better. So I know some people that one of the first things they do is they'll look up their Zillow's estimate. They'll look up their realtor estimation. A Trulia or Homes, they all have an estimation. Now, the one thing I will say, if you have a lot of land, those AVMs struggle. If you have a lot of buildings, those AVMs struggle. It's just a nature of their data sets don't allow them to properly analyze them. They also struggle to have accurate data. So I've had people, well, my Zestimate says my house is only worth 250. Realtor.com says 245. Trulia is at 247, and you guys are at 290. Well, the one disconnect is none of those sites knew that this property had an accessory building that was put up in the last 16 months. They also didn't know about the basement being finished. Those are things that you just have to pay attention to. However, I strongly encourage people to look up their estimate, especially if it seems that those sites have your information. It's a really good, quick, and easy couple minutes. Write them down. Okay, my assessment is 10% under the lowest estimation out of all these. Okay, then it's probably fine. The value is. But I'm still going to look at the data, look at the property record card, and ensure that it's representing things correctly. Because there's basically two main ways in which we can lower our tax burden through lowering our assessment value. That is through data corrections or market value, and that's because we are a market value in use state. We went to market value in use back in 2002 as a result of taxpayers winning a landside tax assessment litigation case, basically saying the old system was unconstitutional and we needed to go to a market value in use. The good thing about that was, and is, in my opinion, all of you out there, myself included, all of us understand value. We understand that if we are selling something, there is a market value, and we can go to recent things that have sold that are similar or try to place a value, or we know at minimum this is what we paid and we're 2 years removed and either it's more used and it has less life or there's more demand for it. There's all these different things. We all understand value because we all buy things on the market, even if it's just groceries. We understand value. So going to market value in use made the assessment system much more understandable from a layman's perspective. From a you and I perspective, if I wasn't in the industry, I could still understand value to a point. May not understand the nuances or the intricacies of assessment laws and how land types and land orders and neighborhood codes and ratio studies all work, but I understand they're all trying to arrive at market value in use for a property. So if you look at your market value of your property, if it's below the assessment, again, file an appeal with your local assessment office and provide the reasonings that you have discovered. Maybe you recently financed and the bank gave you a bank appraisal. If the bank appraisal was not, shall we say, poorly done, most assessment offices are going to be able to spot a well-done appraisal and a bad appraisal. Oftentimes, appraisals will expedite the appeals process, does a lot of the work for the appeals department, and they don't have to delve deep into it. So review that. So review your property record card and review your market value. If you are like, I have no clue how to use the internet, I don't want to have to do any of this diligence, technically you don't have to put a reason on your appeal. However, it is very, very difficult for the assessor's office to know what your issue is if you don't state it. And while I'm on that point, just a very small sidebar. The assessor does not control your taxes. They do not control your tax rate. They don't even know or are aware of what your tax rate's going to be that is going to be applied to that assessment a year later. That's actually a really good thing because what it lessens the chances of is any assessor playing a taxation game. Your assessment should not be impacted by what the tax burden is going to be on the property. The assessor is to chase fair and equitable market value and use on every parcel. Now, yeah, there are some laws that are occurring that are very property specific, and legislators and lobbyists have gotten their way to where certain property types, I would argue, are not market value in use. Again, that's an opinion and we don't need to get sidetracked. Let's talk about the third thing that you can do to lower your property tax burden. Now, this does get into a little bit more on the tax side of things. There are deductions and exemptions that you may qualify for. Your primary resource for all things deductions and exemptions, most exemptions, all deductions are going to be with the county auditor's office. If you happen to live in a township that has a township assessor, the vast majority of your initial assessment type things are going to be done with that assessor. However, if you get to a state appeal type situation, you get into a nonprofit type status of the property, maybe it's a church or something like that, and you need to look into, or you believe that your property should not be taxable, you're going to deal with the county assessor in almost all jurisdictions. Deductions and all of those things, that is done with the county auditor. They are the one that does the homestead deduction, the over 65 deduction, any disability related deductions. Heritage barn deduction starts with them, filters through and is confirmed through the assessors, but then ultimately, once confirmed, is applied by the auditors. So every year, it's a basic phone call or a quick visit. If you're one that goes and pays your taxes in person, in our county at least, the county treasurer, where you pay your taxes, is in the same building as the county auditor. Swing down the hall, ask, hey, I just want to do a yearly check to see if there's any deductions that I'm applicable for now. There is some informational sheets on the Department of Local Government Finance, and a lot of county auditors have it, that kind of breaks down all of the deductions. Those can change because deductions change. So every year, maybe you just log on to the DLGF. If I remember, I'm going to make a note to put the DLGF deduction link in the show notes. And what you can do is you'll familiarize yourself with the DLGF website. It's a wealth of information. We do not put this document on our assessor's page because it's not our responsibility. But we do point people to this DLGF page at least, so that way if they're researching deductions, they can get some assistance. But call your local county auditor. Again, be nice, be courteous. You never know what that person's been through on the other end. They never know. They should be nice and courteous to you because they don't know what you've been through either. Just a quick little side note to that. But yeah, those are the three things that every single property owner, if you're going to own, the way I always look at it is, if you're going to own a property in any state, the onus is on you to understand, or at least know, where you go if you want to question things, where you go to get information, and how you go about challenging it if possible. There are certain things that you as a property taxpayer can appeal. There are things that sadly you can't. I don't know, at least of yet, a way in which that you can appeal that your tax rate is too high. You can definitely let your legislators know, reach out to them. But anything assessment related, you're going to want to go to the assessor. Anything related to that property record card that I am encouraging you to look into. Anything to doing with an appeal because your market value you believe is lower than your assessment, you're going to go through the assessor's office. Anything to do with deductions, you're going to go to the county auditor. So those are the three things. Every single year, once a year, when you get your Form 11, let it prompt you to review your property record card, review your property's market value, and compare it to your assessment. Check with the auditor to see if there's any new deductions that you might or may not qualify for. It's that simple. That is episode 1 of All Things Assessed. Hopefully, it's just a glimpse at some of the information and some of the resource and education that we're going to hopefully provide here through this show, or that I'm going to provide to you through this show. If you have any ideas or concepts or questions or things that you'd really like to hear discussed, put it in the show notes. Put it in, or not in the show notes, but put it in the comments below. I'll try to set up an email. I don't think I set one up for the show, but I will try to do that. I want to be a resource for you. Right now, this show is completely unfunded. If you do want to donate to, or you find this encouraging, perhaps in the future, maybe we'll set something up. But right now, I just want this to be a resource for you because I understand and I see firsthand the frustration that a lot of people have. And I want to try to help educate. There is a saying that I live by in my employment as a public servant, and that is, be the resource that people deserve, not the hurdle that they expect. Too often people view public offices as a hurdle or an obstacle. Now that doesn't mean, unfortunately, that I'm always going to have good news for people, but they need to know that I will spend as much time as possible going over things, excuse me, helping them understand things. And this is just an extension of that on my own personal time. I want to do that for people because I think the more educated we all are on this, the better the system is. And if we are going to amend the system, we can amend it better. And when we write into our legislators, if we do it from an educated position, we can educate them, because believe it or not, a lot of legislators out there, they have no clue about all this. They write bills, but they don't actually know how it's applied on our level, at the counters, in our pocketbooks, yours and mine. They have no clue. So that's hopefully what's going to happen here. Have a good one, everybody. And thanks again for tuning in to the first episode of All Things Assessed.
Don't be afraid to call into your local office. Those people are there. It's been 2
assist
decades or more since we went to market value and use, and a lot of people are still trying to figure that out. 3 things that a taxpayer should do: check your deduction eligibility, check the property record card accuracy, and do both of those things every single year.
They're for the taking, but most people aren't willing to go out there and research for themselves, which is one reason why this podcast exists.